Tesla was up 8% yesterday, but is still down well over 50% overall. Is it time to start adding to your position or potentially build a new one? What is happening, investors? It is your boy Jack. I am not a financial advisor. I'd like to wish all of the followers from the US a happy Thanksgiving. I hope you all have a fantastic day, surrounded with friends and family, baby. But today we are here to speak about Tesla and their recent price action, and specifically, is it time to start adding to our positions? What are the analysts saying? What do the broader global economics saying? What are people saying in general? So first of all, why did it go up so much yesterday? Well, right here, Tesla sentiment improves as Citi pulls their sell rating and Wedbush looks past Twitter drama. So this was the primary reason for the move yesterday. Citi upgraded Tesla on Wednesday to a neutral rating after having the electric vehicle stock slotted at sell. Analyst Tay McKelly and team believe the year-to-date pullback has balanced out the near-term risk-reward profile, okay? Wedbush Securities also announced on Wednesday with a positive update on Tesla. Analyst Dan Ives forecasts Tesla is on track for the 430,000 to 450,000 range of units in Q4, which he thinks should be taken as a sign of confidence for Tesla bulls navigating the persistent Twitter overhang situation. Twitter, it definitely hasn't done good things for Tesla, we'll put it that way. A lot of people think that Elon is beginning to stretch himself far too thin between all of the things that he is doing right now. There's worries that, he could crash in the years to come, and that could also lead to Tesla, etc. crashing. Me personally, that's not one of my concerns in regards to the future of Tesla, if I'm to be honest. I still think that Musk must reassure investors over the coming weeks and months that the Twitter soap opera will not interfere with the longer-term Tesla growth story. And then also, Morgan Stanley analyst Adam Jonas, potentially one of the most followed, Tesla analysts altogether out there, said that Tesla share are approaching their $150 bear case, driven by price cuts in China, decelerating EV demand, and other market currents, so more global issues. Jonas, who carries an overweight rating with a $330 price target on Tesla stock, said that while the ongoing distraction of CEO Elon Musk's foray into Twitter will likely expose investors to added risks, and let's be honest, it is doing exactly that, the group remains on pace to grow sales by around 37% next year. I mean, you don't have to be a genius to know that that is huge, especially in any automotive industry. I know you're going to find some way bigger numbers for some startup EV companies, but in regards to big multi-$100 billion companies, that is absolutely huge. Generate $15 billion in free cash flow and consolidate its position as the world's dominant EV player. This is another one that is concerning people, that their market share is going to lower as the years go on, but I don't think that's something to be concerned about when you ask yourself, should you invest in Tesla right now? We believe Tesla's gap to competition could potentially widen, particularly as EV prices pivot from inflationary to deflationary. With respect to the Inflation Reduction Act, we believe Tesla is by far the best positioned OEM in terms of potential eligibility for consumer tax and production credits. And yes, I don't think many people will argue there. Rivian would definitely be up there in the EV space as well, but Tesla is positioned on top. And in regards to regulatory credits, because when Tesla was first turning profitable, that was the reason why. I just noticed this earlier. I want to give a quick update on that. On top of soaring deliveries, Tesla is now producing profits without relying on the sale of regulatory credits, which is a very, very good thing. But the fact that they're still going to add to their profits down the line because of the Inflation Reduction Act is absolutely fantastic. Net income topped $5.5 billion in 2021, up from just $721 million in 2020, and less than 1/3 of its profit came from regulatory credits. Now, that is a fantastic thing to see, and it makes valuations considerably stronger going forwards. The company's strong results have continued in 2022, with the company highlighted record revenues, operating profit, and free cash flow in the third quarter of the year. So all in all, I mean, things are looking very, very juicy. With that being said as well, Tesla's price-to-sales ratio has fallen to 8.3 from around 30 in January 2021. Now, a P2S of 8.3 is still high. It still looks high compared to traditional automakers. That's because Tesla is still growing fast. And as we just said a moment ago, they are growing so much faster than any traditional automaker. You can't expect that P2S to come down much, much lower. And I mean, if you compare that, look, we have Tesla's revenue percentage change compared to, NIO is there as well, but they're one of the newer companies we spoke about a little bit earlier in the video. You compare them to your Ford, General Motors, Volkswagen, Toyota, you can see why their valuations, their multiples, I should say, are going to be considerably higher or worse in many people's eyes. Now, the general sentiment on Tesla is clearly very, very poor and has been for a while. All you have to do is take a look at that stock chart. And from pretty much this time last year, they are down from, you know, the 400s to where we sit right now at 183 with those lows of about 166. And to be fair, there's no reason for this to immediately have to stop. There is no reason for this bleeding to immediately have to stop. That's why we are speaking from a long-term perspective right here, right now. Now, in regards to a long-term turnaround, I want to show you guys a quick clip from a video right here.
So if it turns around and starts to head higher in a more substantial fashion, is that a leading indicator for the rest of the market?
Yes, because I've always felt that Tesla, to some extent, is a good read on retail sentiment, retail individual investor sentiment. It's a sexy name. For so many people, and that's, you know, yes, it got into the S&P 500, which gave it a big boost a couple of years ago. But the number of individuals who got into the stock, it's such a popular one. You know, we've seen it with so many other stocks that have been popular with individual investors. This one kind of is the main domino out there.
So you'll see Tesla just referred to as the main domino out there in regards to when they turn around, when there is more confidence put into Tesla, when their stock price moves up, we can expect a lot of other EV players to do the same. And I mean, this is no secret. We have seen this for literal years. When Tesla is doing well, generally EV market does well, and when Tesla does poorly, generally the EV market is doing poorly. Now, of course, there are always outliers. You know, if a company has good or bad news, good or bad press, good or bad earnings, whatever it is, that will affect them outside of Tesla's general market dominance. But they do, in general, lead the markets, which is an important one to keep in mind. And again, he's speaking about the domino effect here, which is why it's so important to take note of what, you know, big analysts are saying about Tesla. Even people who were bearish, now putting it to a hold or even turning bullish, that can be the start of the domino effect. And that is when you want to be, you know, adding to your positions when it's beat up heavily and sentiment is potentially about to change. Now, one other reason Tesla always has been and more than likely always will be very volatile in regards to broader markets is because it is so popular with the retail investors. So retail investors are regularly buying these stocks and ETFs according to Robinhood. Tesla is the second most right after Apple. Now, when you have that many retail investors investing in any one company, you have to expect insane volatility, essentially. They're going to move very, very quickly because retail investors are going to get in and out of a stock a lot more than, you know, the likes of your BlackRocks and your Vanguards, any huge institutional investors or ETF managers. They are going to trade more emotionally. A lot of them will sell when they see the stock price going down and down and down. Even if they don't want to, even if they plan on buying back in, they're going to sell and buy and sell and buy. And it creates this whole herd man mentality. Whereas when it comes to the big boys, the people who have all of the money in Tesla, they're not selling for the sake of selling because they're trying to catch a 10% dip. If anything, they're more than likely going to buy. And you will see that now. I will show you what institutional investors have been doing with Tesla all over the place. And you will see that to be true. Whereas I bet if you even just think about your friends who you speak about investing with, a lot of them probably have paper handed many times over the last couple of years and ultimately ended up regretting it. Now, sometimes it's fine. Sometimes people are right to sell their stocks. There is nothing wrong with that. But that is why Tesla can be so volatile. And you can see that, so the largest quarterly institutional transactions, they're really not all that high in comparison to what they have been in a lot of other quarters. But again, look at the institutional ownership here. Mutual fund holders at 27.86%, other institutional at 16.85%, and individuals at 14.9%. One thing I'd like to point out is that the top 10 owners of Tesla Inc. over the last quarter have, for the most part, added to their positions. There are two outliers here. Their total change in shares only went down 0.38% and 1.19%. We see some 10% additions, 4% for the big three here. Institutions are buying. And if you look at these percentages here, the quarterly change in shares of major shareholders in Tesla stock, they are all green and all to the tune of 100+%. Big money is buying. I mean, we're going to have to go for a while before we even find a negative number here. There is one on the 15th of November, down 20%. That is it. Now, truth be told, a lot of these aren't particularly large positions, like 1,200 shares, but some of them are. There's a 98,000 shares with a plus 220% change in quarterly shares. And so we can see that, again, looking at the chart, generally speaking, consumer sentiment, or investor sentiment, I should say, is that Tesla is going down. I mean, it doesn't take a genius to read that. And again, it's not even just this bit we're looking at. If we look at the last year, down, has its big up, goes down, has its big up. We're making lower highs and lower lows. That is what's happening. The trend was broken to an extent here. You see there was a small uptrend happening, but they absolutely smashed back through those levels. And now, I mean, at the bottom there, it reached a low from 24th November 2020. Pretty much a 2-year low, my friends. How low can it go is the question for investors right now. I think a lot of people who actually look at the fundamentals, not just the retailers who do, you know, panic buy and sell as a stock moves up or down, understand Tesla and understand the vision and understand the long-term potential here. And they're the ones who are going to be happy to buy at these prices in the 160s, 170s, the 180s, the 200s, the 250s, so on, so on. Tesla is down a lot, my friends, and I don't think this is the end of Tesla by any means, and I don't think many people will try to tell you that it is. And again, I want to bring your mind back to that whole domino effect. So if you're looking at some of the smaller EV players, whether it is still, you know, Neo, or whether you're looking at your Rivians, or you're looking at your ChargePoints, or you're looking at our Lucids, any of those kind of things, you know, the domino effect is real. When Tesla does make its next little turnaround, let's say, we can expect some solid upward moves. But anyway, my friends, that is my current up-to-date thoughts on, you know, the general consumer sentiment here in regards to Tesla. There is a lot of upcoming catalysts coming as well. I'm more than likely going to make another Tesla video in the near future where we'll speak about some of the actual catalysts, as I think a lot of people can lose sight of that very, very easily. I will, of course, be making videos on all of our normal EV stocks. I also have some videos in mind about some, you know, just nice consumer long-term stocks, some dividend plays. Once I'm settled down in a new house, I am wanting to get back to investing regularly. So I am in the process of trying to figure out what exact direction I want to, you know, pivot my portfolio into. Because again, I think there are so many opportunities in the market right now. I know it all seems bleak and despair, but I mean, I started my investing journey, if we go back to 2020, Tesla chart's not really going to show us much, but if I get the S&P 500 up, for example, November 2020, March 2020, I should say, but around here is when I started investing. I mean, I saw the VU here go from 310 all the way down to 201 in no time whatsoever, and everybody was panicking. There was mass hysteria. And then that's when, you know, the most wealth would have been created in a long time. We got this next huge upward move. Obviously, it still is downward. One of the worst downward moves we've seen in many, many years in the S&P, in the NASDAQ, etc., etc. But now is the time, ultimately, to, you know, figure out where you want your money to go. That is the plan, baby. I apologize that this first video took a while to get out to all of you guys who watched till the end. Trust me, I wanted to get one out sooner, but I haven't been following markets at all very closely for months at this stage. And it takes a while to kind of catch yourself up. So the last 2 days has been a lot of reading, and I was so tired at the end of the days from just being here watching interviews, trying to catch myself up, that I was just wrecked and the videos wouldn't have came out well. But now I'm feeling a little bit more fresh. I have some positive habits put in place. I'm back in the gym. I am absolutely broken up, my friends. I will tell you that for free. I was going to bed last night and I had to keep moving every 2.5 seconds because my chest and arms were literally cramping up. But it feels good. I'm also back to reading. I'm back to eating regularly. I'm feeling good, baby. But anyway, my friend, if you did watch this video all the way till the end, you are a true legend. I really do appreciate you being here from the bottom of my heart. Your support means the world to me. I really am going to work hard at making, you know, myself work a lot more again. I'm really enjoying it. The last 2 days of just research have actually done great things for my head. So here's to it, baby. If you did enjoy, please do hit that like button, drop me a comment down below, and subscribe if you're new around here. I hope you all have a beautiful, blessed day. I'll see you for another one very soon. Peace.